Let's start with Kevin Green joining us to take a look at the positioning into the weekend here. KG, where's the big level today that we got to watch?
I think the big level for today, obviously, 5750, we're going to continue to talk about that. There is a gamma wall there, but we have seen some activity going into the 5770s. So that would be your secondary area of resistance for the market if we were going to have a bull run to the upside here. And then on the downside, look at 5720 going to be your immediate area of support before hitting that major gamma level to the downside of 5700 here, Oliver. I mean, when you're kind of looking at the makeup for today and kind of the setup when it comes to the technicals right now, I would not be surprised if we kind of come back, kind of retest maybe that 5730 area before trying to truck higher, maybe try to press through that 5750 area, which we are once again kind of testing here today. What's a little bit different about today compared to yesterday is the amount of advancing stocks compared to declining stocks. When the market just opened here, we had over 438 stocks that were advancing. So breadth is definitely widening out. Maybe some of these mega cap names catching a little bit of a bid in some areas, but also maybe the semiconductors kind of having a little bit of a rotation. I mean, as soon as Micron opened today, it immediately dropped around $2. So semiconductors obviously is going to be the key catalyst for us to try to move higher here. But if we can hold the breadth so far when it comes to some of these other underloved sectors, or the ones that we just don't focus on that much, industrials, energy, real estate, what have you, small portion when it comes to the market cap of the S&P 500, but really key when it comes to sentiment for bulls in this market that's still trying to truck higher here.
Yeah. And it seems like we continue to attempt breakouts. We keep trying to get through these gamma walls to the upside, and we're kind of seeing how this whole kind of field of thought works, because for the most part, it's acted as a little bit of a boundary, a bit of a guardrail. We're kind of coming up against it. We keep taking shots on it, but we haven't quite been able to break through. So it seems like if and when we do, that could be kind of the nice next juice for the squeeze, basically the way it happened when we went from 56.50 up to the high 57, and so that kind of gap, right? That was kind of a similar way where we were trying multiple times. We had the resistance at 56.50, and then we broke through to the upside, and now we're kind of repeating, it seems like, to some degree, a little bit of a range trade.
Yeah, I agree with you. I mean, every time that you hit a resistance area, and the closer and closer you get to it, or basically the less dips that you have as you're getting closer to it, means that you are gaining relative momentum here. You just need that catalyst in order to kind of push it through. I was of the mind this morning that maybe PCE could be that catalyst, especially if we would have had core PCE headline coming in at 2.6%, not coming in at the street's expectations. Unfortunately, we were not able to get that. But you're right, continuing to test it, holding that 5720 too, I think is a really meaningful thing. I mean, we have a longer term channel line, a secondary channel line that actually still is intact, and with breadth actually expanding, it gives you bigger chances or bigger odds that we're going to be able to try to break through this. Now, what could upset us for the remainder of the day? We have an options expiration on Friday. Obviously, we might see some volume going in the latter half of the day, especially last hour and a half. And we also do have consumer sentiment, the revision coming from the University of Michigan. So if we see a massive revision either to the upside or downside when it comes to sentiment data, that could also be a catalyst for us to either push higher or push lower. So that's what I'm keeping my eye out on. But that reverse or the inverse head and shoulders pattern is ultimately bullish, and it seems like we might be trying to hit that neckline, or at least the recent highs at 57.67. If we're able to do that on some very large volume, especially early on in the session, I think that's where you had that melt up. The 57.70 area, once again, we saw a lot of activity into that yesterday, and it actually did stick when it came to the open interest. So it was not only just volume. So we are getting that incremental move up when it comes to gamma levels, and that's what we want to see. I mean, we would like to see a little bit more aggressive to the upside, but we're not. It's incremental. 20 points is 20 points. And if we can continue to kind of hit these levels and close at these levels, I think, once again, it's bullish until the economic data points suggest otherwise. And the only, let me put this on the radar. Next week, it's going to be employment week, right? It's jobs week, if I'm not mistaken. So we're going to have ADP data that comes out. We know this time, earlier this month, ADP data was weaker than the street's expectations. Everybody was bearish. Market sold off. We know the jobs report wasn't as great. Market kind of sold off. So we might actually have some turbulence for next week just because of the cycles that we've seen on a month-to-month basis. We have employment data that kind of ruins sentiment. We have inflation data that actually improves sentiment. And you have Fed commentary that also improves sentiment. Next month, we will not have Fed commentary. The next meeting is going to be for November. So keep your eye on that trend. It did not break this month. It's the same thing that happened last month, and I would say that probably will continue moving forward here.
All right, yeah, so we got one more print here coming out this morning. Sentiment 24 minutes. Definitely interesting after the confidence miss earlier this week when you think there's a lot of reasons for sentiment to improve, for sure. Thanks, KG. Good thoughts. Good look at the levels, too, as S&P 500 stalling out a little at 5750. NASDAQ just went red, too.